When it comes to Nvidia stock, remember who's the one selling the most picks and shovels. Nvidia is still the one selling all the picks and shovels. The company stands to benefit greatly from big tech's purchases of high-end AI chips. This catalyst will drive growth to sustain and increase Nvidia stock valuation. Let's dive in. The AI gold rush is still in full swing. Here's why you should buy Nvidia stock while you can. Welcome to Timely Investment Research. After skyrocketing from $150 to over $900 per share since the start of 2023, some think Nvidia has generative artificial intelligence growth baked into Nvidia stock. It may seem that way on the surface. Valuation-conscious analysts, commentators, and investors agree. Nvidia stock is overvalued. They may even try to recommend to you AI value stocks in its place. Nvidia may seem expensive on a screener, but its growth prospects suggest otherwise. The AI gold rush in big tech is a major factor. While it's unclear which tech titan will ultimately prevail, just remember that Nvidia is still the one selling the most picks and shovels. Nvidia stock, breaking down competition and valuation concerns. Yes, it's not just valuation that has investors wary of buying into Nvidia at record highs. Concerns about competition have also been top of mind. However, as we have discussed previously, concerns about the impact of competition on Nvidia's future growth may be overblown. The expected growth in the AI chips industry should offset increased competition for Nvidia. Just as there is a rebuttal to competition concerns, there is also a counter to valuation and growth concerns with Nvidia stock. The market's optimism may not accurately reflect the company's future prospects. Nvidia may not be cheap at 75.6 times trailing 12-month earnings, but compared to the stock's forward valuation of 36.4, shares are clearly in growth at a reasonable price territory. As for perceived uncertainty about growth in the coming fiscal years, much like we hinted earlier, it's all about an important factor that's still in play: just what the customer ordered. Last month, Nvidia unveiled its latest, greatest line of AI chip products, the Blackwell series. As stated in the Blackwell news release, Blackwell's GPUs are the world's most powerful chips. Tech sector heavyweights are looking to snap up as many as possible as part of their respective AI infrastructure build-out efforts. Don't underestimate how much Blackwell could help to extend Nvidia's growth runway. As analysts at CFRA recently argued, Magnificent Seven big tech firms are spending a total of $175 billion on capital expenditures this year. This represents a 25% increase compared to 2023. Much of this spending will be of high-end, high-power chips like the Blackwell processors. Capital expenditure growth is likely to keep growing in 2025. So, what does this mean for future results and the future performance of Nvidia stock? For one, Nvidia is well positioned to report strong results for the current fiscal year, ending January 2025. Results could even top consensus of $111.3 billion in revenue, $24.81 per share in earnings. The high end of forecast call for $155.8 billion in revenue and earnings north of $30 per share. In the coming fiscal year, ending in January 2026, elevated growth may persist. Nvidia remains a high-potential, less chancy wager. While there are no guarantees in investing, there are situations where risk-reward is more in your favor. It remains unclear which particular tech titan will prevail in the AI wars currently taking shape. Early movers in generative AI software could stay on top. Other major players currently playing catch-up may end up leaving said early movers in the dust. However, no matter who wins or who loses, Nvidia could continue to profit greatly from this battle for control of this new tech frontier. Nvidia's earnings could more than double in fiscal year 2025. In fiscal year 2026, earnings could come in at nearly $42 per share. Even without additional multiple expansion, this could be enough to send Nvidia to not just $1,000 per share, but up to $1,500 per share as well. With this clearer path to higher prices, Nvidia stock remains a solid buy. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.